to the next episode of PHILCast. I am Tatum, CMO of Philcoin. Now, you may be wondering where our charismatic host Enyo is. It is 1 o'clock in the morning on his side in the US, which is why I am hosting this episode today with our very special guest, Leslie Chan, who is Chief Blockchain Officer of Foodstarter. Welcome, Leslie. I'm so happy to have you today.
Thank you for having me, Tatum. Yep.
Great. So, Leslie, do you want to give a quick introduction into who you are, your experience, and what you're currently doing?
Yeah, so I started in 2015 into the blockchain space. So I'm also a blockchain consultant for several projects, and also a primary educator in Singapore itself. Helping the masses, with the adoption on blockchain side of things. So the project that I'm on and you guys are actually having me on is actually called Foodstarter, which is a incubator and accelerator for farm projects, where we are actually helping companies to digitize their physical assets, into the blockchain space itself. Yeah.
I love that, Leslie. And for the listeners that are out there, they may not know, Leslie has become a friend and also a mentor to all of us on Philcoin, especially the Dubai team. So, Leslie, I actually just wanted to chat today and take it back to, the history of blockchain. We talk so much about crypto and obviously things that are happening in the news. I mean, the last 24 hours and 36 hours have been very, very exciting in the crypto space, which we'll come to a bit later. But I thought, let's just start from the very, very beginning. How was blockchain started? Like, where did it all begin?
Yeah, so with blockchain itself, the very first granddaddy of all blockchains, right, is the Bitcoin blockchain, obviously. So it started somewhere between 07, 08, during that period of time. So it's been a good 12, 11 years, I would say, plus minus, right? So that's where it all started with the Bitcoin, where it is a electronic form of peer-to-peer transfer of digital value in the first place. So that's how it all started back then for the blockchain. And then subsequently you have Ethereum, and then subsequently you have more blockchains joining the ecosystem itself as well. So I think the interesting thing about the Bitcoin blockchain is that it was an experimental, like an experiment between the top universities, when the paper was being shown to the different universities, and that's where they started to explore and say, what if we could do direct to direct transfers from peer to peer. And then it was something that was not so and it was decentralized, right? So that's the key thing about Bitcoin, right? Where a lot of people previously had to have the help of a digital bank or a digital payments processor to help them process their digital values anyway. So Bitcoin was after the Lehman Brothers crash. Yeah, so I think that was a catalyst for people to start exploring different types of decentralized trusted network where the Bitcoin blockchain came about. So I think that's in short and in gist that's how it is. Yeah.
Love it. Well, thank you so much, Leslie. And I think, contrary to popular belief, people think blockchain and crypto are the same thing. But one of the analogies that I really love is when you think about blockchain as train tracks, right? And I don't know if you've heard that analogy. So blockchain being the tracks, it's the process, the foundation that lays the foundation for crypto. So can you dive a little bit more into just the key differences between blockchain and crypto and why they're not the same thing?
So blockchain is actually, every transaction has to have a cryptographic token, right? So if you are on a decentralized network, then there is that need for, every time when there's a transaction, there will be that, ledger record, right? So every record is a cryptographic token. So how do we use the token is really subjected to the projects themselves, right? So If you have a centralized blockchain, then they are still using the same tokens, but they are not treated with a monetary value. So that's why people are always saying there's a separation, there's a degree of separation between the two. But if you are in a true blue crypto blockchain project, then the tokens itself would be connected one way or another. Yeah. So I always ask my students this as well: is there a difference between a blockchain and the token? Most of them will say they can separate them, but in actual fact, everyone is using a one form of a cryptographic token one way or another. It's just a matter of whether there is a value attached to it and whether it's being monetized or capitalized as a result. Yeah.
So you can have blockchain without a token. That's correct, right? So blockchain can run on its own.
Yes, you can actually have a independent blockchain like Hyperledger, which is an IBM's one of the their centralized data centers, right? Basically, that they actually help to provide that service. And so when you run on their blockchain, it's actually still storing some form of cryptographic token on their database itself. So that's one form of centralized blockchain as a result. Companies that they are major enough, maybe Google, I'm not sure, I suspect. In Singapore, we have this company called Grab, which is like your Kareem in Dubai, right? So the travel app, right? They are already using an in-house cryptographic token. So do they call it a blockchain? I think they were careful not to say anything about that previously, because I think there was some form of a bad connotation 5 years ago with any blockchain projects. But if you look at their hash, there is actually some form of how should I say? There's some form of long string hash that's within it. So it really depends whether it is formulated as a cryptographic token, and then and whether it is being stored on a blockchain as a result. So I prefer to talk about more on the decentralized blockchains, because it's more open source than the closed ones, like the ones that I just mentioned, like Hyperledger. Yeah.
Thanks, Lizzie. I mean, it's a whole world on its own, and it will take many more than just one podcast episode to uncover everything. So taking it back
For
then
sure.
to Bitcoin. Bitcoin is obviously always in the news, and everybody knows Bitcoin as the titan crypto that exists in the world. Now, you spoke about it being started in 2008 after Lehman Brothers and after the Great Recession that we had in 2008. So what do you think what was the core purpose of Bitcoin to begin with? What were they trying to bring to the world? What was the main advantage for bringing Bitcoin?
Yeah, so for Bitcoin itself, there's this thing called a validating node, basically, right? So the validators, which is the miners, would be that trustless, a digitized form of trust, right? Between computing codes, for that matter. So the main purpose of the paper was to actually see if they could decouple from the banks as a result for the trust factor, right? The validating third party, right? So if you were to send money between two banks, right? The banks would still need to do checks between, like let's say now, Tatum, you want to send me $1,000 in USD to Singapore, then your bank needs to talk to my bank as a result, and that takes time, right? So because they need to check with you have if first of all the transaction, is it an amount that you have, and on my bank, do I even have a bank account, and are they even talking to each other, quote unquote, on their legacy systems and things like that. So obviously you have Swift and all the different payment processes. However, for Bitcoin itself, it's seamless, meaning to say, if you have a Bitcoin wallet, I have a Bitcoin wallet, and the code says that you have 1 Bitcoin, for example, or 0.1 Bitcoin, which is almost the equivalent of $1,000. You want to send that to me. and they just need to validate on your wallet that there's a 0.1 Bitcoin to send. So the primary reason I think at the back then was to allow people to send, and that's why the meaning peer-to-peer comes to play, right? That's why people wanted to know, is there a way that they could send digital values across a decentralized network where there's no middleman involved as a result. So that's why the whole structure came about, for Bitcoin.
Thanks for touching on that, because I'm actually traditionally from the financial services background. So I have a lot of peers who just don't understand what I'm doing within the space and how it works, and a lot of people don't understand the key differences, but they also don't understand what the original purpose of Bitcoin was. People hear all the news, they hear about the hacks, they hear about the scams that happen, people saying that, they've started a new crypto and it's not a real crypto, it's a scam project. So they always hear the bad news. They don't actually hear the purpose of Bitcoin that started originally, which was actually for the greater good. So
so it's interesting how you bring this about. Sorry. So it's interesting how you bring this about, because it was only because of a bad actor in Lehman Brothers, which was a form of banking back then. And banks traditionally have a lending and borrowing purposes, not just on a retail level, but on an institution level as well, that certain human errors were made, and there was fraudulent activities that came about. And so this was a test, right? This technology was very new. In fact, Bitcoin may not have been the first, blockchain project, because there were other projects that were like digital cash that's being experimented on in 06, 05, basically, and people are already doing that basically. But I think the catalyst and the trigger event was the Lehman Brothers crash, that people started to be awakened, right? And they, as a result, they were like, okay, so if this is not working, what other alternatives do I have? And as a result, the Bitcoin's paper was being sent around the universities, and they were just exploring. I mean, universities have this thing about research and development, right? And so when they stumbled upon the paper, they were like, okay, why don't we go about testing this as a result? And in the early days, everyone was just mining Bitcoin with no transactions, right? It was only until the person wanted to have 25,000 worth of Bitcoins $25 worth of Bitcoin back then for the purchase of 2 pizzas, right? Basically, so they had to try some form of social experiment and say, okay, look, I'm going to transfer you 10,000 Bitcoins as a result. And that kind of kickstarted the value of the Bitcoin, as a result. We have to thank the dude that sent 10,000 Bitcoin, because without him, there would have no perception of value for Bitcoin in the first place, right? So, so that's the interesting fun fact about how because of a like a black swan event, if in the financial sector, usually people would say that, right? For Lehman Brothers, and it was a build up, right? And everyone suffered as a result. So alternatives were being explored as a result, and Bitcoin is where it is today because the adoption started to pick up, and it became what it is today. Yeah.
I love that fact, and the pizza story is a really fun one. I really appreciate that you touched on perspectives, because for me, this whole landscape that we find ourselves in now with blockchain and crypto is all about changing perspectives. It is providing that alternative to fiat currencies and to the traditional banking system that we are so used to, that we grew up with. Now, I'm South African, so I come from a developing country where a lot of people, we are still trying to get them to even just enter the banking system. They're still putting their money under the mattress, they're still stuffing it in chairs, they're hiding it in jars in the cupboard. It's still quite a mission to try and get them to take that money and to store it into a bank account, not even trying to go into having a savings account. And the next level would be trying to put their money away into digital currencies. So I think a large part of that is obviously perspective. It's also, the fact that people are not educated about crypto and blockchain. But I think there's also a large part of it that comes down to that security. You can touch your money when it's in a,
Mm.
you can touch your money when it's in a chair, but you can't touch your money when it's in a bank account or when it's in crypto. So how safe is crypto really? How secure is it from hacking? Because we're always hearing about hacks and scams.
So we always have a rule in the crypto space, right? Not your keys, not your crypto, right? So this is a age-old sentence in the first place. Not your keys, not your crypto. In fact, I make my students repeat that after me all the time. So the thing about crypto is that always remember it's peer-to-peer, and if you don't have controls over your own wallet, then you're gonna have issues with the trust factor. So case in point, when you say hacks, exchanges being hacked, it's actually not your crypto wallet that's being hacked. It is the exchange's crypto wallets that's being hacked, and because they are they are your custodians of your crypto that you have bought. So the risk, that comes as a result is the custodian aspect on that. So when hackers come in to hack an exchange, for example, they are always targeting towards the crypto wallets in the exchanges itself. That's what they are targeting basically, and not your wallet. Because when you create your own wallet, it's actually under the main under their custodian main sub account wallet, basically, so to speak. So always remember it's peer-to-peer, meaning to say wallets like Metamask wallets, your blockchain.com wallets, those give you your private keys that actually allow you to use that to your advantage, where you are able to use the cryptos to transact peer-to-peer. So if someone, usually that's the case for most of the crypto people, usually in pioneer space or the old guards that has been taught, for the matter. The concern that I think I've expressed quite to you as well when we met was that especially with the NFTs, I'm sorry, I'm going to digress a bit into NFTs.
Yeah, go for it. Go for it.
Because people are like so curious about it, and it's so easy to download a MetaMask wallet. But what they don't realize is that when they don't store their private keys correctly, then you're gonna have an issue of claiming your wallets. It's still a very nascent industry, because I think improvements were made to the MetaMask wallets only this year. But MetaMask wallet has been around since I think at least 3 or 4, 5 years ago, where they have already developed this wallet for this purpose itself, and it's actually meant primarily for Ethereum specific projects, basically, right? Because Bitcoin's blockchain and Ethereum's blockchain will not be able to talk to each other. As a result, you can't send Bitcoin to an Ethereum chain, neither can you send an Ethereum to a Bitcoin blockchain as well. So that's one of the primary a newbie mistake that a lot of noobs make, right? They're thinking that crypto is just crypto, but they don't realize that it's like different currencies, right? Basically, like you say you're from South Africa, and if you bring South African money to Singapore, then you got to go to a money changer to change out into Singapore dollars. So it's something to that equivalent, basically. Yeah.
So that's again perspective, isn't it? And I think that's so fascinating for the listeners. Is number one, when it comes down to security, comparing your keys to your bank PIN, for example, you wouldn't give away your bank PIN because you wouldn't want people to have access to your money. So the same way you would not give away your private keys to your crypto wallets. It's the same level of risk that you're putting yourself that you're exposing yourself to. So you keep that safe as well. You either memorize it or you write it down somewhere, and you keep it safe, or you put it into a password storage platform online. And then the second thing that you spoke about as well was the transfer on different blockchains, which I really loved, because It's so true. You know, as global citizens, you and I, we are traveling around. You know, you're in Singapore, but you also have your family in the Philippines. You come to Dubai. I'm South African. I live in Dubai, but I also travel to different places. I cannot take one single currency with me to each of these places. I have to take different currencies or I have to exchange it. So that's the same way
Exactly.
with cryptos. You have to exchange that on the various blockchains in order to make those transfers. So
That's
fascinating,
correct.
Leslie. Thank you for sharing. So, one other thing that I wanted to ask you about was how did Bitcoin gain its value? Because that was monumental, right? That was like in the blink of an eye, we suddenly knew that, wow, something is happening here with Bitcoin. It went from zero to $200 to $1,000. And today, obviously, we've had what's happened over the last 36 hours, but it's still in the tens of thousands of dollars for one Bitcoin.
Mhm.
How did it gain value? And then, as the second part of the question, how do cryptos in general gain value?
So there's a different perspective to Bitcoin and other cryptos, right? So I think let's clearly define that as from the get go and the start. Bitcoin being around for 13 years, not 11, correct myself, 13 years since 2008 and to now, or 14 years, sorry. The thing is, the Bitcoin had a long trajectory of adoption, right? For people to understand, to learn, and to maybe say, I want to try this out and want to send Bitcoin across to somebody else, right? And it's still being experimented on in that aspect, right? Like you mentioned, in your villages, or maybe in poorer countries, or third world developed countries, they are actually much more open to using technologies like this because there's a very easy way of transfer of wealth, right? So, or transfer of digital value as well. And so, Bitcoin itself, primarily what we need to take note of is that in the code itself, there will only be 21 million Bitcoins, right? And because of that number, all right, and it's mathematically proven, so don't ask me to write the math or show you the math. You can go and study it online. It's been proven many times that it's not even an arbitrary number for some reason. I do not know why. So it was done by some mathematician that calculated it for that matter, and it will last you to 2140, to the year 2140. Okay, and so because every 4 years, Bitcoin has this thing called a phenomenon called Bitcoin halving. It's within the code itself, which means the supply is diminishing at 50% for every 4 years. And so if you don't get in now, so the question you have to ask yourself is, back then when people were mining Bitcoins at 50 Bitcoins per block, then what's going to happen is right now they're only getting 6.25 Bitcoins as a result. And so as the supply keeps diminishing, then and the adoption keeps increasing, then there will be a need for for people who wants to come in in maybe 5 years from now and say, okay, I decided I want to get in on Bitcoin. There are friends like who think too much, like that I have spoken to them 7 years ago. You should come in, and to date they have not gotten in,
Yeah.
and they are looking at the spectacular rise of the price, and they would say in today's context, they would say, see, I told you Bitcoin went down. But here's the thing: if they had gone in when I told them to go in, they're still in profits. So meaning to say that because the value, when I started to, kind of educate people on this in 2015, the price of Bitcoin was only $300 basically.
Wow.
And it really depends on when did Bitcoin, when do you enter for Bitcoin, right? And if you entered in the last 1 or 2 years when the price was really high at 60,000, to me, one Bitcoin is just one Bitcoin, regardless, right? 60,000, then all you need to do is just keep holding on to it, because one Bitcoin, you just own one Bitcoin out of the 21 million for the matter. that should be most of what people are treating, or having the perspective to treat Bitcoin for that matter. So if you ask me about the value of Bitcoin, then I would say the supply and demand itself would be it would be sufficient to create that value of Bitcoin for that matter. It's also used as a primary source of stored value. Then if people ask me, so this still doesn't answer the questions, then my question to you is, why does gold have a certain value in the first place? It's all about the perceived value, right? And if you are in a trading background in the financial sector, you've been taught this 101 basically, right? About perceived value. Yeah, and that's what people are trading on in the first place. So you may think there's nothing real about the situation, for Bitcoin. Just ask yourself, if you look at the market cap, there's actually more than $1 trillion being traded at its peak. So when you ask about value, then it really depends, right? So on the individual's perception of Bitcoin itself. Which with regards to your second question, for other cryptos, I think there is a growing innovation in the other cryptos where they're starting to bring use cases to it, right? And what are the use cases, right? So when you bring an ecosystem that talks about adopting the crypto that you are in, then there is a proven factor of how these cryptos would work, right? Because the understanding of an individual projects is very important, right? That's when you need to know what are they using the crypto for, and how is it being utilized and used in the ecosystem as such. Is there enough liquidity to create the volume, and as a result from the price itself? So there will still be a need for time, to grow for these crypto projects specifically, and most of them are still very young at this point of time. Ethereum obviously is like the grandmother, so it's older. So you get more. There's more information as a result, right? So on the use cases on Ethereum than any others, because they were at the forefront, one of the earlier adopters for crypto itself. That's how the value is being created as a result. So yep, I hope that answers the question. There are two questions actually. Yeah.
Absolutely. I really, really appreciate that, Leslie. Thank you. So Leslie, you touched on the cryptocurrencies, how they gain value, and also how Bitcoin gained value, but you also used Ethereum in your answer, which everybody's hearing about these days as well, because that's also been in the news lately. So what are the key differences between Ethereum and Bitcoin? And what is it about Ethereum that makes it an ecosystem as opposed to just a crypto?
So Ethereum itself has a smart contract layer, and then so whenever somebody does a transaction, the smart contract is embedded in the transaction itself. So Bitcoin is transactional because it's just peer to peer, and so there is no smart contract for now on Bitcoin. Whether they have it in the future is something else. I'm not sure. So it all depends on the innovation, on whether there's going to be some form in Bitcoin itself. But for Ethereum itself, other than the transaction tokens that you are sending, remember we talked about the cryptographic tokens that's been sent to and fro, right? On top of it, there's this thing called a smart contract layer. And so that's what makes it different, and that's what opens up the innovation for adoption for businesses in this aspect. So that's what makes Ethereum so special to date, because they have been the benchmark to learn from, and so other blockchains are also learning from them as a result, because it's open source, right? And so, for example, if let's say you want to have a smart contract layer and you have a transaction, so all these smart contract layers, what it does is it stores data, right? It stores information, and we call it metadata as a result. on the transaction itself, and as a result, we are able to make a seamless peer-to-peer transaction for the method. So I could send you a contract on the Ethereum network between you and I, for services digitally, using Ethereum as the cryptographic token that that's sending to and fro. So on top of the transaction that's being sent, I'm sending you the smart contract and the information that's being stored on the chain itself. Yeah.
Amazing. There was something also that you spoke about earlier that I wanted to touch on. So we've got our Bitcoin history, we've got our blockchain history, we've got a little bit of Ethereum that we've just received from you. But again, that's another episode for another day entirely on Ethereum. But when you spoke about people doing their research on projects, what research can they be doing? What should they be looking out for? Because there are over 20,000 cryptocurrencies. Yes, there's Bitcoin, then Ethereum came about, and now in the blink of an eye, we have over 20,000 cryptocurrencies in the market. How are we able to distinguish between what's real and what's fake?
Yeah, so online there are aggregators that you can actually go to. So aggregators like CoinGecko, CoinMarketCap, these are good places for you to start first. And I would look at maybe top 10, top 20 projects or coins that has that information. So when you click on this information on this aggregating platform, you are able to actually gain a lot of information, like the websites, from there. And that's how you do your due diligence, right? So from the website, you're able to see who are the team members, you join their social media channels, you see what they are doing in terms of the project, are they still active, and things like that. So projects will come and go because it's a startup space, because a lot of experimentation is going on with the innovation. So the risk will always be that when I tell my students is never put in what you cannot afford to lose. So if you just got to know of this potential project, and the question is, what is your exposure, right, and your optics as a result. If you only know this project from your country and other countries have not heard of it, then I would think there is a very high risk for this project to fail. Doesn't mean that they are not able to build first as a result. And it could be slow as well. So the project, for just an example, right? I got into ADA in 2017. And to date, it's still the way it is, right? And it's only recently that they started to make some form of improvements. So you have to ask yourself two things: are you in it for the technology, or are you in it for trading purposes? So that's always the main two things that I always ask my students. If you are in it for the speculative nature on the trading, then I would say you need to be very extra careful. And not all projects would be ideal for you, or it best for your appetite to do that. Trading purposes, right? Because you're just doing very fast trades, or as a result. Or are you in it for the technology and the ethos of the company, and the team members? In this case, when you see that the team member is actually growing and building the project, then you know that there is some form of potential as a result. Yeah, and these things and these teams and these companies will take time to build the technology to the next level. So case in point, Ethereum back then was the hot project on the market, right? And so because it was so hot, everyone was just trying to figure out what Ethereum was, and what does it entail, and it was so technical that I think a lot of traders didn't understand. They missed the opportunities. And Ethereum themselves had a hard fork back then as well, because of a hack that happened. This is a long story anyway, so I'll keep it short. And as a result, I think when I got in, I got in at $7, and then when that news came, it just hit $9, for the Meta, and people were just telling me, you should sell your Ethereum now, because the project's gonna fail, right? But there wasn't enough ample understanding of on what the team and the entire project wanted to do. It's only on hindsight that after 7 years, no, in the industry, or sorry, 8 years in the industry, that I'm able to see that, hey, look, Ethereum is actually doing this much of things. But had I had the benefit of hindsight, back when in 2016, 17, then I may have not sold everything as a result, right? So these are the things that people want to come in to understand. I think there has to be some level of maturity in terms of whether you're trading or whether you're investing as a result. So that's usually what I leave with most of my students anyway. So yeah, hopefully that helps the viewers and people to understand what they're getting into. Yeah,
it's really, really important advice, because a lot of the time people are buying into cryptocurrencies just based on the hype. They see it on social media, because a large part of our lives are spent on social media these days, and crypto lives in the social space. So people see a tweet, or they see something on Telegram, they see something pop up on Instagram. It's all about that herd mentality. So people are wanting to follow the herd. If people are buying in, they buy in without doing their own research, which is the DYOR, do your own research. Which is what we try to tell our communities as well. Every time we write a blog, or we post not advice, but we post news, we always say we're just sharing the news. We're not actually giving you financial advice or advice on which cryptos.
Yeah, for sure. Yeah.
And also when it comes to, these early stage projects, and I, again, comes back to perspective as well, like you said, is to look at what that future could look like for the project, what kind of technology it has, what's the ecosystem, who are the people behind it, and then have that perspective of buy and hold. I think a lot of people are also in crypto looking at it as a get rich quick scheme, but there's also a whole lot of technology behind it that is looking to improve processes, improve people's lives, and also it just improve traditional ways of thinking as well. So we are seeing a movement now. I mean, Philcoin ourselves, and also the program that you are involved in, is all built around trying to either improve logistics, or improve the charitable space, or help people on the ground. So what kind of other movements are we seeing within the crypto space when it comes down to charities and philanthropy? Do you think there's been quite an uptake in it, or do you think that people are still quite judgmental or questioning when it comes to the charitable space and merging with blockchain?
I think what's happening at this point of time, and on the top down, especially in the top level, management, specifically, in companies where they're using the technology, they're exploring the technology itself. They are beginning to realize how powerful the technology is, right? Because it really shortens some level of process. It does, but one thing that it doesn't solve is the human aspect to it, right? So there's still going to be a need for the from innovations and processes itself. There would be a need for standards to be across industries, right? I'm crossing fingers that you guys would be the, kind of the standards for philanthropy and how charity will work, because in Singapore itself, I do see some philanthropy movements and charitable organizations who are wanting to reach into this space, but they have a hard time reaching out to this, because there's, first of all, very poor understanding of how to use the technology. There's also the speculative nature that you just mentioned, that we just talked about. We also have the business aspect as well. So these are some of the key components that I think will still need time to on different industries to come together as a result, because that convergence between the legacy systems and the new innovation is when people need to find out, oh, have we been doing this the wrong way, and is this a better way, and how does it affect the standards or the regulations that's going to come into place and things on a business level. So this is I don't really have an answer for you specifically. I think more so it is the understanding on the technology, more forums, more outreach, for people to understand that, hey, first of all, there is something innovative that you can explore, and how do you go about doing it? I think a lot more discussions needs to take place on a top down, for the matter. And governments usually tend to play a wait and see, or create a certain safe place for companies to grow together. So the private sector can actually have the freedom to explore. I think that's something that's important. So these are things that I see across all the around the world itself. After my trip to Dubai and meeting you guys, there's so much more, how should I say, cooperativeness and collaborations that's happening in Dubai, where it's being encouraged heavily by the I would say the authorities and the regulators, for that matter, or the associations. So I could see that there is that demand for specifically, and so people are free to explore as a result. Yeah.
Yeah,
I'm hoping people use Dubai as a benchmark, or a standard that people want to come in and do that for the nature, right? So yeah.
yeah, Dubai is trying to establish itself as this crypto and blockchain hub. And we're all about innovation over here. You see it in the skyscrapers, you see it in our buildings, all the way down to the cars that people are driving on the road. Everything screams
Exactly.
over here.
Yeah.
I have to agree, from the conversations that we've been having across industries, across different sectors, across different companies, people are a lot more open now to having these conversations. They might not be entirely convinced just yet about how crypto and blockchain might fit within their sector, but they are willing to have the discussion. They are willing to hear about how it works, how it can improve things. And it might take a year or two for them to come around, but at least those doors are starting to open, which can lead the way for massive changes across industries, simpler processes, more transparencies, understanding where transactions are going, understanding the beginning and the end of any process as well, because that's a lot of the time, that's the challenges we're seeing in any industry is, perhaps you might be donating money, for example, to a cause. You don't know where the money goes, but it's the same thing. Even when you are looking at healthcare, where does the money go? Sometimes, you're going for an X-ray, you're going for a scan, you're getting charged a certain amount of money. Where's that money actually going? What are you actually being charged? All of this can be solved with the alternative of looking at these collaborative partnerships between blockchain and the more traditional and, like you said, legacy industries. So I know.
I like to add to that. Yeah. So I mean, it just for the benefit for Philcoin communities, conversations that we had in Dubai, right? I mean, this is something that I think it's important for people to understand, that when two industries come together or people are coming together, that these are things that people don't see. Right? You and I, we had the privilege and we had the opportunity to do that because we stepped out of our comfort zone. We met up and ideas came about, and innovation came about because, for example, the farms that we have in Philippines itself, and there was a disaster with the tornado that happened last year. Philcoin could have been one of the partners that actually could help restart the program for the farms in Philippines itself. So these are things that if we had not opened ourselves up in the first place, I just want to encourage everyone to do that, because we wouldn't know that there would be opportunities or collaborations of this kind of nature in the first place, right? So, and I think that's where people may be asking, like, how does Philcoin come into play? And I'm not shilling Philcoin as anything else, but I'm just saying that because of the philosophy and the philanthropic. Oh, I'm having a hard time pronouncing the word philanthropy, philanthropy aspect of the coin itself. Then there are opportunities where projects or charities can actually come to you to say that, hey, we're in need of help. Are we able to do this with you? And most of I was in a forum with a charity not long ago, and they were concerned about taxation because things like that. And so I guess on that aspect, there are you guys are growing, and I think understanding from one of your co-founders as well, Dunstan, he has also told me that there's going to be tax payment taken care of in the US and things like that. So it's amazing how you guys have gone to that extent, right? To make sure that the whole aspect is the charitable aspect is being taken care of, and it resolves not just your project, it resolves on helping our project as well, because the farms needed help in Philippines, so the and as a result, the lives were changed, because we were able to touch on certain things, with after the whole natural disaster happened. So yeah, I hope we can have deeper conversations on this with to reach a mutual understanding, and people may say, oh, how does this work? But know that when the blockchains come together and the projects come together, there will be some form of synergy and innovation that is going to create that other people have not seen before as well. So yeah, I'm actually excited to be honest. Yeah,
Very
for the
exciting.
space.
Very, very exciting. And I have to thank you as well for your kind words about Philcoin and also explaining a little bit more about what it is that we're wanting to do. And I think, like you said, the right partnerships, the right collaborations, I think it comes down to two things. One is future planning and future proofing. So future planning, making sure you've got a legacy in place so that you can plan the futures with your family, your friends, making sure that you are empowering your lives, empowering other people's lives so that they can plan for their futures. They can have the wealth creation aspect to it. That's on the one hand, but then there's also the future proofing, right? So it's making sure that you've got stocks in place, you've got some sort of cushion in place, or a safety net in case something happens as well. The next natural disaster, the next recession, the next political instability, the next war, anything, making sure that there's something in place that's going to protect me as an individual, protect my family, but also protect everybody else, which is also where that charitable aspect comes in. If and when the next crisis happens, how are we able to give back? How are we able to make sure that funds are reaching those in need? How are we making sure that we ourselves are also protected against the next recession, the next war, the next natural disaster? So that's where partnerships come into play. These are ambitious goals. They cannot be achieved alone, not by one crypto, one blockchain, one company, one sector. It has to be a collaborative effort. So I think that's the beauty of these conversations that we're having, between me and you, but also between us and the listeners. And hopefully they will share the word with their communities and their people. And hopefully we'll see more of these legacy industries and more of these traditional places, taking up conversations with those in the blockchain space and seeing what opportunities are there for us to make things better.
Yeah, for sure. Yeah, this is a very interesting topic, because when we started our farms in Philippines 4 years ago, the farmers didn't understand crypto, right? Even though facilities were already ready, and The Philippines is actually very adoptive of cryptocurrencies, and it was only much later and through the exposure of our project, where we actually built pig farms. The pig farmers are actually transacting in USDT, through us as a result. So we're able to actually send USDT across because these farmers finally understood the value of the cryptocurrency, the stable coin itself that they came about, right? And previously they were so resistant that we had to transfer money across. And when we transferred money, oh my God, it took us 7 to 14 days just for us to transfer large amount of monies to Philippines itself. Not saying that the financial industry is of a huge delay, but when crises, like you say, they are in need, then there is a need for the deployment of those funds that comes as a result. So I'm just giving this as an example, because right now the farmers themselves have grown, and we have really helped them, to not just feed themselves, but also feed their own families, feed their villages. And you can see that there is a growing factor, because uh, these are areas where they have not been exposed. And fortunately, for one of our farmers who came to us, he's now the advocate in his village to tell them, say, hey, why don't you join the program and build the farms together. And they're having as a result, they are educating their families, their daughters, their sons, the children, basically, when previously this was not wasn't an option, or wasn't on the table as a result. So the kind of impacts that we're talking about, I think that's really powerful, like what you just mentioned. So hopefully that gives an understanding of what we are trying to do as well from Food Starter. We incubate projects, we accelerate them, like the pig farm itself, and on top of it, these people get who come to us and give back to them. There's more than just giving back. They are able to actually get some form of joint co-op, where the farmers themselves are giving back to the project supporters as well. So it's quite surprising how this whole ecosystem took a while for people to understand, because of the trust issue that we're talking about. Yeah.
That's so powerful and such a beautiful story, because I think people relate to those human stories. They are able to visualize something better when you give them more of an on the ground, real human story. So thank you so much for sharing that. And oh my gosh, there's so much that we can unpack, even just within this, charity and blockchain space. I mean, obviously, we are very passionate about it, since it's a large core of what we do. But I'm so conscious that you are a busy person. I know it's in the afternoon on your side, and you probably have some meetings to go to. So I do not want to take up any more of your time. But I am so, so appreciative to have you on this podcast, Leslie. You're a wealth of information, a fountain of knowledge, and you've really shared some golden nuggets with us today, which I'm sure our listeners will take away and possibly even take it into Google to do some more research and to understand a little bit more about the space. So any last words from you before we leave? Any advice for our listeners?
Yeah, so I mean, trust the team. Look into the space, do your due diligence, before getting into something that you don't understand. And check out communities. I think joining crypto communities is one way for you to best find out the fastest before getting your hands wet, feet and wet, hands wet in the space itself. So I would encourage the listeners to come in and listen more often as well, and I would be more than happy to come back again. We can share more stories if you want to, or war stories if you want to. Unfortunately, we didn't have enough time to cover what's happening yesterday and today. But all I can say is just keep calm, and just keep on building. For those who are not affected, and sympathies to those who have been affected by the current situation at hand, which Yeah, so that's all I have for the listeners for that matter. So yeah, thank you for having me.
Brilliant advice, Leslie. Thank you so much. It reminds me of that post to keep calm and carry on. You know, it's never a dull day in the world of crypto. You know, just enjoy the news, enjoy the entertainment, but just keep calm and carry on. You know, when we start to panic and we panic sell or panic buy, that's when things really you start to lock in whatever tragedy is happening at the moment. So thank you, Leslie Chan. To our listeners, please give him a follow. Follow him on social media, Leslie Chan at Food Starter. He's the Chief Blockchain Officer. And of course, appreciate all the listeners out there. Please follow all of our social media on Philcoin and look forward to having you on the next episode. Leslie, we will chat again very soon, I hope.
For sure. Thank you.
Have a great day. Bye-bye.
Bye-bye.